Hello friends, this is Salim Rajani, the real estate agent over here in Dallas, Fort Worth. Today we are again in front of the screen to discuss an important topic. As you know, the real estate market, everybody is quite interested in purchasing their house and everybody would like to have the primary home. And to get that home, you have two options. Either you will purchase by liquid cash or you are going to adopt an option of mortgage. Today we are going to discuss and touch base that what are the loan options available to you and there are how many loans available in the market. So today we have an industry expert, Mr. Amin Hirani.
Hello everyone.
He is the loan officer and for last more than 5 years he is in this industry and he is engaged with the Barrett Financial Group, which is a well-known name in the lending industry. So welcome Amin.
Yeah, thank you Salim bhai, as always for having me, and I'm happy to be here.
Perfect. So as we were discussing, can you elaborate that what kinds of loans are available in the
Yeah,
market?
sure. Most of the individuals, they are aware of, we've been hearing so much about different loan programs, but there are quite a few different loan programs available. But there's certain grades like qualified mortgages and then non-qualified mortgages. Okay. Most of the first-time home buyers or investors, we usually try to get them under qualified mortgages, and it designed according to diverse financial situation. हर की अपनी financial situation है, right? So we need to find out their income, their assets, their liabilities, and according to that, and the credit score, of course, plays a vital role. According to that, we go with which was the right program for them.
Right.
Like you asked me, कि कौन सा program standard है, and we are discussing between Urdu and English, correct?
Yeah, we can
we
do
always
mix
it, or
and
you want me to?
matches.
Okay, perfect. Conventional, FHA, Veterans, VA, and USDA. Those are the four popular programs available that falls under qualified mortgages.
Perfect.
Right? Conventional, it's not backed by government program, conventional, but it's been done through private lenders, and people must be familiar with Fannie Mae and Freddie Mac. Those are government-sponsored agencies, right? So those they are the one who create the guidelines and compliances, and we have to go according to their guidelines to get you qualified for conventional mortgages. Conventional mortgage, the key element of this mortgage, why people would like it, and who would be better for individuals.
Yeah.
Whoever have a good income, like a steady income and better credit score, then conventional is a good option for them.
Steady income means the mortgage that you are taking in the monthly installment, so your income should be 3 times of your monthly income.
Yes.
So
basically, employment steady. I mean, how you have a W2 income, or if you have a self-employed, you have a continued, like more than 2 years in the business you are into.
right.
This all depends on your employment is for. If you have a good steady employment for last more than 2 years, and you have a good credit score, which is I'm talking about 680 plus, just to give you some idea. For conventional steady income and 680 plus credit score, we would usually advise to go with conventional loan.
Perfect.
The key element of conventional loan is basically the mortgage insurance, because when you put any down payment which is less than 20%, there's a PMI, there's a private mortgage insurance that added to your monthly payment. Conventional loan, the only good part about the people would like it, because if you reach to, for example, you're just putting 10% down right now, right? But 2 years down the road, the way Dallas market or Texas market, appreciation goes on, and you keep paying your principal out. If you reach your equity 20%, we can get your primary PMI removed. But if you're putting 20% or more down, there will not be any mortgage insurance in there. But this incentives comes with conventional loan. That's the reason people would love it. And also, conventional is not just for primary residence. It's for investors as well. We have programs for investment properties and second home as well.
Perfect.
So this falls under conventional. So this is one of it. Second one, I will go with the FHA, which is again very popular program. The reason FHA, again, like I mentioned on the conventional credit score, I mentioned 680 and steady income. FHA is a government backed program, so it's been backed by government basically. It says it's a government program, basically,
Perfect.
right?
Yeah.
So lenders who is lending you money is been backed by government, so
Got it.
they are protected with that thing. But you have to go with the guidelines of government
Good.
FHA guidelines.
It's a lengthy process as well, certain
Um,
complications as well
no,
by means of documentation.
So basically, people have that myth. But basically it's a more lenient program.
More lenient
Yeah, it's a lenient program because the reason is focused more towards the low income people, not too low income people, but compared to conventional low income people and lower credit score people. So to qualify for FHA, minimum score is 580. 580 plus, we can get you qualified with FHA. Conventional, which I mentioned before, is 620 plus, 620 credit score and plus. So you have more room in FHA. So people who are with the income strain, lower income people, and lower credit score. So FHA, we can get them approved. That's a better program because one more advantage of the FHA, their debt to income ratio is a little higher compared to conventional. So conventional, for example, is more confusing now, but conventional has a DTI limit of 43 standard, 43 plus, mainly 43, and FHA is, we can go over 50% as well.
Got it.
So this is more room for people that have more liabilities and all that thing, we can get them qualified through FHA.
Got it.
But FHA, key element again on this one is just for first for home primary residence.
Only for primary
only for primary.
residence.
You cannot do
Perfect.
investment properties.
And what is the time duration means?
Correct.
Is it how much time period required for FHA and for conventional
For to qualify?
to qualify?
It's the same time period.
Same
There's
time
nothing
period.
extraordinary.
Perfect.
Sometimes FHA is the appraisal is comparatively is more stricter appraisal because the health issues and everything they do
Okay.
check that compared to conventional. So there are some pros and cons on both of programs. But once my client call me, I would like to know their goals, what they're looking for, their financial situation if they discuss with me. At that time, we can evaluate what programs fits best for you at that time. So this is how we evaluate, and I can advise them accordingly.
Got it.
Yeah.
Got it. But only in FHA you have a down payment
Yes.
3 to 5%,
Yeah, you
and in conventional you have to put more down. So that is a major difference.
So there's again myth in this thing. For FHA, yes, it's 3.5% down minimum for FHA loan. You can put 3.5% and you can get a qualified.
Yeah.
That 3.5% can be your money or 100% gift money. You can get a gift from your parents or your brother, sister, siblings. There are different grades on this thing, but you can have so 3.5% is the minimum down on FHA. Conventional, there's a limit. You can go as low as 3% down. It's a newer things comes in
Okay.
but that's for first time home buyer. So there's a programs available, Home Ready and Home Plus, those Freddie and Fannie programs, where you can go as low as 3% down. But again, remember your credit score and your down payment is the key factor for your interest rate,
to determine the interest rate.
right? Because again, I think I mentioned before, those are the two things how lender look at it, how risky is the loan. More equity in your home, more down payment, and better score, your financial situation. That's how they evaluate, and that's how they offer you the rates. So
One more thing, in the FHA you can also buy points as well.
yeah, points is something it's completely yours. How would you like it? You want to spend money upfront, you can get a even better rate. So rates, and always FHA rates are comparatively better than conventional.
Okay.
But the only thing is on FHA, the MI mortgage insurance is for the life of the loan. If you're putting 3.5%, again it's confusing. But if you're putting more than 10% down on FHA, then after 11 years your mortgage insurance can be removed.
Got it. And how much is that insurance roughly? For example, if there is
So
a house
I was this morning actually before I was here. I was running a scenario for one of my client. They were looking for a $400,000 home, but they were trying to put 10% down on that one. Okay, their mortgage insurance was coming for FHA was $150. To be specific, it was $149.
Okay, per
Okay.
month.
Per month for mortgage insurance, and conventional for 10% down against less than 20%, it was $69. For as of today, it could change, it could go different way, but with $400,000 home with 10% down, this is what I came up with this morning when I was running a scenario for one of my clients.
And audience, this PMI insurance is different than your home insurance. So you have to purchase separate home insurance and PMI to just protect
The lender.
the lender.
Correct, that's exactly what it is. So those are the criteria about the conventional and FHA. Now again, like I said, who was going to, if somebody would like to know which program is going to be fits best for them, same thing. Once I get to know their goals, what they're looking for,
And then we can.
their their down payment, their financial situation, their credit, their liabilities. According to that, I can advise them which program is. But
Perfect.
as far as qualification, we can get both of them qualified.
Perfect.
Yeah.
Alright, I think it was a great and knowledgeable session. Hopefully you liked it and this information help you out in your next buying of your primary residence or either the investment house. So thank you so much,
of
Amin
course.
bhai.
Anytime, and if you guys need any advice or just want to discuss it with me, because this is just the brief we give it to you.
Yeah.
There's a lot more goes into that, right? Because of the guidelines and all that. But again, I can advise you if you'd like to get in
Perfect.
touch with me.
Feel free to ask if you have any questions. You can reach out to me or Mr. Amin.
Sure.
My contact number is 817-918-5696 and you can also reach out to
You can reach out to me at 405-410-8663.
Thank you and have a nice day.
Bye.